Hello everyone and welcome back to Explain the Charts. Today is October 29th, 2025, and we are diving deep into Alphabet, ticker symbol Google, which is facing a pivotal moment with its Q3 earnings report scheduled for after the bell today. The stock has been on an absolutely monumental run, soaring 38% in the third quarter alone, marking its best performance in 2 decades, and it has continued that momentum this month. The news driving this surge is overwhelmingly positive, focusing on Google's strengthening position in the AI race and a favorable outcome in its major search antitrust case. Several top analysts have taken note, with JP Morgan notably boosting its price target to a whopping $300, calling the recent DOJ ruling a major overhang removed. KeyBank Capital Markets echoed this sentiment, also raising their target to $300, citing accelerated product velocity in Search, Cloud, and Waymo. However, there is a healthy dose of caution in the air. The AI race remains incredibly competitive, with data showing Google's Gemini chatbot still holding a small fraction of the market share compared to OpenAI's ChatGPT. This earnings call will be crucial, as investors are looking for concrete signs of AI monetization and continued double-digit growth to justify the stock's sharp rally. Wall Street is expecting earnings of $2.26 per share on nearly $100.1 billion in sales, setting a very high bar for the company to clear. Now, let's turn to the charts to see how this narrative has played out in the price action. Looking at the daily chart, the long-term trend for Google has been undeniably bullish for the better part of the last year. We can see a significant turning point right at the beginning of September. The stock gapped up massively on September 3rd, jumping from around $211 to over $230 in a single session. This move directly correlates with the news of the favorable antitrust remedies, where investors celebrated that Google would avoid a forced breakup of its core businesses. Following that explosive move, the price entered a healthy consolidation phase for the rest of September, building a strong base of support in the $240 to $252 range. This sideways action was crucial for absorbing the initial surge and preparing for the next leg up. The breakout from this range occurred in mid-October, when the stock decisively cleared the $252 resistance level, signaling a continuation of the uptrend. This breakout was followed by another surge, with the price gapping up again just this Monday as pre-earnings excitement began to build. Currently, the stock is trading just below its all-time high of $270.73, which now acts as our most immediate and critical resistance level to watch. On the downside, our first key support level lies at the top of that old consolidation range, around $252. A break below that would be the first sign of weakness, potentially leading to a test of the lower end of the range near $240. The massive gap from September, between $212 and $225, represents a major long-term support zone. A drop into that area would signal a significant trend reversal. Let's zoom in to focus on the price action over the last month to get a clearer picture of these key levels. As you can see, the consolidation throughout late September and early October is very clear here. We can also see the brief dip on October 21st, which news reports attributed to speculation about a new browser from competitor OpenAI. Notice how buyers stepped in aggressively to defend the $244 level, and the stock recovered within a day, demonstrating significant underlying strength and investor confidence. The subsequent rally has been powerful, culminating in this week's run-up to the current highs just below $271. Now let's switch to the hourly chart to analyze the most recent price action heading into today's crucial announcement. Here we can clearly see Monday's large gap up, which took the price from around $260 to an open above $264. Since that gap, the price has been coiling in an increasingly tight range, primarily between $266.50 on the low end and the all-time high just above $270. This tightening pattern is classic price action ahead of a major catalyst like an earnings report. It represents a balance between buyers hoping for a blowout report and sellers taking profits after the massive run-up. The market is essentially holding its breath, and the resolution of this pattern will almost certainly be explosive. Flipping over to the 15-minute chart for an intraday perspective of the last 2 days, this consolidation becomes even more apparent. Yesterday's session was characterized by choppy, sideways movement within that well-defined range. This tells us that traders are hesitant to place large directional bets right before the numbers are released. What happens after the bell today will dictate the market's next major move. So, to recap everything, let's go back to the daily chart. The key price levels to watch are critical. Resistance is squarely at the all-time high around $271. Beyond that, we have psychological levels at $275, $280, and of course the big analyst target at $300. Support lies first at the intraday low of $266.50, then more significantly at the breakout point of $252, and below that, the consolidation floor at $240. Now for some unbiased predictions based on the earnings catalyst. I believe there is a roughly 70% probability of a bullish outcome. If Google beats earnings expectations and provides strong forward guidance, particularly on AI and cloud revenue, we could see the stock gap above $271 tomorrow morning. This would likely trigger a rapid move towards $280 and would reinforce the possibility of hitting that $300 target before the end of the year. Conversely, there's about a 30% chance of a bearish scenario. Given the massive rally, expectations are incredibly high. Any disappointment in earnings, weak guidance, or concerning commentary on rising AI infrastructure costs could trigger a sell the news event. In this case, the stock could quickly drop to test the $252 support level. A failure to hold $252 would be a significant bearish signal. The key things to listen for in the earnings call will be any specific numbers on AI monetization, the growth rate of Google Cloud, and the outlook for YouTube advertising. And finally, it's important to remember that this is not financial advice. This video is for educational and informational purposes only. You should always do your own research and make investment decisions based on your own analysis and risk tolerance.